Morga, that's also what happens when you start having kids, man.
Yeah.
Unless you're John Jones, unless you're John Jones, you just get skinnier.
Yeah, I didn't have kids, so that was that's. I mean, me personally, but
Well,
Well, I mean, I wouldn't be able to hit a 74, so
you got to be able to get around on it.
Yes. Yeah, we're speaking about the golf champion from this past weekend, Mr. Two Over. You had the hot hand, Mr. Two Over.
Won't always happen, probably not again.
Welcome to another episode of the Context to Contracts podcast. I am Bryan Lovell here with Mr. John Jones, and we have a two-time offender on the podcast with us today from the Jersey Shore, Mr. Greg Morga. Dude, welcome.
What's up?
What's up, man? I have the same hat on and the same shirt.
A year later. Man,
dude, I hope you at least washed it, man. I hope you washed it.
I know. I just have a necklace on now. So,
you don't have time to change or worry about a wardrobe with as many loans as you've been writing.
No, for legit. Yeah.
No, it's just XL instead of large, and it'll be XXL if you have
if we have you on next year.
That's the way life seems to work for us.
Hey,
I'll have to have a wide screen.
Morga, that's also what happens when you start having kids, man.
Yeah.
Unless you're John Jones, unless you're John Jones, you just get skinnier.
Yeah, I didn't have kids, so that was that's. I mean, me personally, but
Well,
Well, I mean, I wouldn't be able to hit a 74, so
you got to be able to get around on it.
Yes. Yeah, we're speaking about the golf champion from this past weekend, Mr. Two Over. You had the hot hand, Mr. Two Over.
Won't always happen, probably not again.
So listen, Greg, the reason we asked you to come on, man, you have had a pretty great week for you and your business. Can you share with us, dude, how's your week been?
So, I mean, we had the VanDyk Summit, so I was getting loans when I was out there to the point where Kara was like, hey, maybe you should just stay in Florida and work at a hotel. I was like, talk to my wife, I wouldn't mind. But no, I was getting a lot of refinances this week. I got 3 rate and term refis on Monday and Tuesday.
Wow.
I got 4 cash out refinances. Then I came home and 3 purchases were accepted. And that was just from my team. Then, from me. Then Carrie got her own loan. My LO's got about another 4 to 5 loans. And right before we went on, I got another cash out. So I think we got a total of about 12 to 13 deals since we left this week, which is probably one of the more successful weeks we've had since the beginning of the year, since rates have gone up and everything like that.
I want to jump in there on that.
I was going to say, so if I'm doing the math right, you've got 8 refinances that have come in just this week.
Yeah. Mm-hmm. Yep. Mm-hmm.
Right.
And some of them were people that I talked to and stuff like that. But anyway, what were we going to say? Sorry.
But I don't understand. Rates are on the rise.
Yeah, I was going to say, so rates are higher than they've been in 23 to almost 24 months, right? Where were all these people in the last 23 months that they didn't hit you up?
Well, I think it's a multitude of things. I think the necessity of the refi really is a market dependent. It just depends on your client, and you just got to dissect them, diagnose them, I guess you would say. So I had 2 of my rate and term refinances they were in the high 3s from 2018, 19, right around there. And, we talked about doing a 15-year loan. So 15-year loans, I was still able to get them right under 3% with points paid, but told them the benefits of doing that and showing them, how much they could actually save in interest accrued, right? And obviously their payments going up, but that's why they called me. They weren't calling me to save money monthly. They were calling me to save money on their loan. So I said, at this time, a 15-year gets you to where you want to be. So they were absolutely happy with it. One of them didn't have mortgage insurance, so it wasn't just taking their mortgage insurance off. The other person did. And then the third rate and term refi was just somebody that was at a 4.75, and I got them right under a point off and got their mortgage insurance off and saved them money too. So that was the rate and terms. And then the cash out refinances wasn't about the rate. It was about what they needed to do. And just having conversations about renovation and, fixing up their porch and letting them know that you should lock the rate now because they are going up, right? So we're talking rate a little bit, but talk about strategy because the contractors are taking 10 years to get your estimate, But if you have a budget in mind, like a serious budget in mind, like a limit, let's get you that cash out now before the rate's 5 and you're losing $60,000 in monthly payment worth by the time you take it out. And you can just leave it in the bank. And if you don't use some of it, worst case scenario is you can always put it back towards your principal. But you're probably going to use it for something, or you can use it for fun.
Yeah.
So
that's a cool strategy.
That was the base.
That's a cool strategy. I want to talk about that for a minute. So the first advice that he's making is, hey, we don't know when the work is going to get done because contractors and supplies are backed up, and we don't know how much it's going to cost. So let's just take out the max cash that you need, right? That'll be enough to get the work done. You can either do something else with the cash that you took out, or you could just apply it to the mortgage. And I think a lot of people don't know that. I'm assuming, Greg, what you're talking about is the ability to do a recast.
Not necessarily even a recast.
Even a principal reduction every month to a mortgage or one time is going to drastically, change how long you're going to pay and how much interest you're going to pay on the mortgage.
Yeah. I mean, depending on the amount you take out, right? It could be a recast, but I mean, I'm talking about even if they took out 20,000 more than they needed, I don't think a recast really is necessary there. I don't think the amortization is going to drop so significantly. So just simply put it back into your principal if you want to, right? Most people don't, but they can. And I think just the idea that they can makes them feel more comfortable with not knowing what the set budget is. And then I also show them more strategies too. Like a lot of people that need a new roof, but I had somebody that didn't think they had enough equity. They wanted to get their bathroom done, they wanted to pay off their debts, and they wanted to fix up their roof. But they didn't think they had enough equity. And so I said, hey, did you know that when you get solar, they actually will do a roof for you for free? And I said, that could save you 10 to 15 grand right there, and also lower your electric bill, which could take away maybe $150 a month, which is equivalent of taking out another 30,000 on average. And they said, whoa, I didn't know that. And then I said, yeah. And then, we can skip a payment. You're going to get your escrow back. That's going to give you another 5 grand. There's some of your bathroom, right? And your debts are about $20,000. So instead of exceeding your cash out refi, we can keep you at a 70 loan to value, which makes the LLPA a little bit better for cash out refis, especially for lower FICO. Save the money out of the equity and get them the same thing that they want, but doing it smart. And then it's not really about rate anymore. It's about strategy and making sure using their money the right way.
I think you use the word strategy, and I love that, because what you're truly doing is he is advising, right? It's like we've been saying for a couple of weeks on this podcast, like we're in a season where you have to be a true professional, because we're going to start to separate the great from the average, right? Or the great from the at-leasters, or whatever you want to call it. And like he just gave us some really good examples of how he's consulting consumers to make the choices that are best for them and their family, and using the equity in their home to do it. So kudos to you, man.
Yeah, I mean, I think the over the last 2 years,
Thank
rates,
you. And I mean,
as low as rates dropped, 18, 20 months ago, right? People were just thinking, I want to grab the low rate. And the loan officer in many cases was just churning deals so fast. They didn't take time to say, hey, I've noticed you've got 3 credit cards. I noticed on your application you have 2 children. I mean, what's your plan for sending them? I mean, we didn't take those steps. It was just quick, easy. Here's your 2% locked and loaded. Now you have people now saying, hey, I did want to renovate. I do want to send kids to school.
Yep.
And maybe, by the way, I want 12 months reserves of living expenses set aside in the bank that's going to make me sleep a little bit better at night.
Sure.
So there are a variety of reasons, and rate, as Greg said, rate's never an issue when you have other reasons for getting that money.
Yeah.
Yeah, and I mean, it's just a value proposition too that you're adding. Like, you're showing that you actually know what you're doing and have value. You know what I mean? Like, it's not just a sales job. I think the last 2 years, even though it was great for everybody, it was really just more like, here's your rate, here's how you get there, and don't shop me, please. Right. I think now you're going to see a lot of people that were just order takers and stuff like that. And I'm not even saying there's anything wrong with that. It's just a different market. They're not going to be able to get their loans as quickly as possible, and keep in mind too, that none of these people I called first, they called me. These were referral based. So it shows you that like your Rolodex is still so important. But if you want to maintain that Rolodex and people sending you business, you have to be able to give more than just a rate, a number. You have to be able to give the why behind something. And that's why I love cash out refinances so much more, because I feel like there's so much advisory opinion that you can give that's outside the paradigm of just what your rate is in APR. I mean, you can start talking about investing into opportunity, the loss of opportunity, right? The loss of opportunity now is you don't use your equity and put it into appreciating assets, real estate, crypto, stocks, bonds, something that gives you money. So why not, even if your rate goes up, if your dividend is higher on return than what your rate went up, even if your payment goes up, you're still having a lost opportunity if you don't take that cash out, because you're losing money that you gained for free. That was the whole point of buying real estate, right? It's an appreciating asset. Or why wouldn't we all rent? Why wouldn't we all rent and not have to fix our fridge and not fix our water and not fix our heat? We buy assets so that we use them. And I think the paradigm shift in people's brains as far as financial advising is going from paying off your debt, right, and having no debt, to using your debt wisely and having smart debt rather than bad debt. And I think that's really the kind of education piece that you need to have, but you need to believe in it in order to sell it. And I do believe in it. And I think more people should. That's the whole point of ownership, is to be able to use your value and use other people's money, which is whether that's home equity, whether that's rental income to pay for your house, to buy more investments. Why not? This is the biggest money grab that you could possibly have. How many times in the world were you able to buy a house 5 years ago and have 33% increase in your equity?
Yeah, it's awesome.
Yeah, it's crazy. All right, dude, you said something that blew me away. So you just said that you haven't made a single phone call to these folks to get these refis, that these are all inbound calls, people calling you from referrals.
Yes. Mm-hmm.
So how are you getting your message out now? Are you doing any kind of mailers that are getting your phone to ring, social media ads? What are you doing there?
I do mailers.
Okay.
I do mailers and stuff, but that's really more like product based. Like, for example, I've mentioned to you guys 15 times the solar. I'm really going heavy on solar refinancing right now. I've also sent out mailers just for cash out refinance, but really those mailers are just to show people that I exist in the area. I would say that all these referrals are either past clients or family members of past clients, or referrals from realtors and financial advisors and stuff like that. I don't have a direct system set up yet, like direct business. I'm all still just referral based right now. I'm trying not to show myself. Sorry, I'm not trying to show myself as a salesman, right? I want to advise. So when people reach out to me, the beauty of being a referral base is that you're not selling the product. You're just advising on the product, right? You're showing why the product can make sense. And not every single time do I get the deal. There's plenty of times when I don't, but I think I get more than other people don't, because I think you just got to go a little bit further. You got to think differently, and you got to show the person that you know what you're talking about. And I think that's when they start really like believing in you and believing in what you're saying and are willing to, go with it.
Yep. So I'm going to give an example from last week. Speaking of financial planners, I love this one. So, in the scenario that I have that I want to share real quick is somebody that's been in a home 10 years, never took advantage of a refinance. The rate is the same as the rate we're offering today.
Okay.
Right. So they paid into the mortgage for 10 years. 20 years left. They have a salary job, single person. If I go ahead and do a cash out refi today at the same rate, and we go ahead and pay all 3 credit cards and take an additional $100,000 out, what would that situation look like in 30 years? Well, the payment that she's paying monthly would stay the same. She'd have no more credit card debt at high interest rates. The $100,000 invested with a financial planner for 30 years, when she's 65 and retires at 7%, turns into $1.5 million. So you're setting up the consumer that's using the leverage, like Greg talked about, and the equity that you have in your home to plan for your future and your financial success 20, 30 years down the road.
So their mortgage payment today after the cash out refinance
taking $100,000
is the same mortgage payment, but they've eliminated all of the credit card payments.
Yeah, and again, this was about $25,000 in credit card debt, nothing substantial, but just how those numbers, and again, the rate's the same that she has now. So why not take an opportunity to look Now, again, we're not telling people, and Greg, you mentioned this earlier, take $100,000 and go on vacation, right? Travel the world for 2 years, because that's gone. But take the money and actually sit with a planner, right, and put it to work for you. So, whether that be in starting a business or just investing for your retirement. But and now is the opportunity. We have massive equity in our real estate today. So, be creative, like he talks about, and really look at some strategies that can help you, create massive wealth.
Yeah.
So just a little tidbit, just for example, and I might not know the exact number, so anyone out there that hears this and says I'm wrong, I'm just estimating, guys. All right, but typically the S&P 500 historically gives about a 7 to 8% return, right? So that's a higher return than 4%, 4.5%, 5%, 3.875%, 3.75%, right? So you're winning, right? If you just want to make it that simple. Now, I'm not saying everyone should go out and just take out cash and put it into the S&P 500. Like, we don't want to just do that quickly. But talking back to like people that want to limit, like, hey, what monthly payment are you comfortable with no matter what? All right. Okay, it's X. Well, X gives you $90,000, right? If you think you're going to do your house and you think it could cost between 60 to 90,000, let's say you got a deal and it costs you 45,000, right? Now you have something else you could think about with that 45,000 besides just putting it back into your mortgage. Maybe you take 20,000 and you put it into a stock. Maybe you take the whole thing. Maybe you go buy Bitcoin. I don't know, but you can do it. And you're doing it at a lower rate now, historically, than you could have. And as less the rates go high like they were in 2007 and 6, you are winning on a dividend standpoint, but you have to have the right people to talk to, CPAs, financial advisors. And that's why it's so important for lenders to have these people at their disposal, because they're the kind of people that could give you an extra value gain where now you're not really talking about mortgages, you're talking about investment.
Yeah. So you're kind of working as like a team.
I mean, keep in mind, whether you have, 100% equity in the property or your maximum finance, that asset grows at the same rate of return. So, I mean, you might as well take that other money and leverage that somewhere else. You're still going to gain 5%, whether you have it fully mortgaged or, or 50% paid off.
Let me ask you something real quick. If you took the word mortgage out and you took out all the news about rates and interest rates and stuff, and somebody went up to 10 people and said, you all can take out $100,000, right? And your payment would be minutely different compared to what you're paying right now. How many of those 10 people would take
Take the money, man.
Yeah, I think you're saying if you eliminate the word mortgage, that they're more likely to say, hey, yeah, I'll take that.
Yeah, and obviously you still want to explain to them everything. We're not saying that, but what I'm saying is the basic concept of being able to take money, right, that isn't from income, it's from an investment that you've had, and being able to take that out and invest in more and make dividends off of that and not even affect your payment that much relatively, right? If you took out the word interest rate and mortgage, people would mostly do it. They say, why wouldn't I do that, right? So we have the highest equity position probably right now of all time, right?
Ever.
History, yep.
It's that simple. It's that simple, but you can't just tell people to take out cash and not give them any value. That's why you need that Rolodex of people that take it a step further. But you also need to know yourself a little bit more than just telling them the monthly payment and the interest rate, or then that's what the conversation is, and then you'll lose the client.
Yeah. And that goes back to the point I was making earlier. Like, you've got to be a true professional. I think we can tell we've been talking to Greg for about 15 minutes. Like, he's taking a consultative approach as he's talking to consumers about the equity that they have in their home and how they can make it best work for them. That makes the conversation no longer about the rate, really, or maybe even the payment. And I think
it's about the benefit. I mean, what you're going to get out of it.
Yeah, and I think in the market we just came out of, you mentioned 20 months ago or whatever, there was no really selling or consulting. It was, hey, people
I
want to refinance, give me the low rate.
Missed the opportunity. I mean, in many cases, right? You could have back then, got locked in at 2%. Why were you just refinancing? Why weren't you pulling out money at 2%? I mean, you talk about the S&P at 7-8%.
Yeah.
I mean, if you had done that at 2%, I mean, you always need to be thinking about leverage and where can I earn more if I took money from this at this rate and applied it to this at that rate.
Yeah. I think one of the other things you think about is, you guys throw rocks at me if I'm wrong, but, a cash out refinance does come with a little bit of a higher rate than a regular rate and term. And I think, right now we see rates on the rise, which would tell me, normally when they rise, eventually they fall too. I think in a couple of years, Greg's even going to be in a position where he can rate and term some of these folks and even get them into a better payment than they have now, after having done everything that they needed to do at the state and life that they're in right now.
I'll take it a step further. With the equity that I anticipate over the next year or two or three, we all know that in the next 5 years we're short. It's a supply-demand issue. Housing is still predicted to increase, right? Each year over year, we're not looking to take a step back in value. Mm-hmm. If you're able to refinance in 2 years and you take a cash out today at 2%, explore other options then too. Yeah. I think the point is that whenever you have an opportunity to refi, look at everything. Ask the LO or the bank that you're working with, hey, what else should I be looking at? What else am I missing in this opportunity? Yeah. I mean, you are going ahead and paying closing costs. Should I take $50,000 and put it in the bank for reserves? Should I go ahead and plan for retirement? I have this month. Really sit down and and put some thought to it instead of just, hey, I locked in at 2%, but I should have, would have, could have.
Let me touch upon about closing costs, because that's obviously people's main concern too, right? You should be paying as least amount of closing costs as you possibly can when you do this. I really do believe that with the cash out refi, you really shouldn't worry. You should take the free rate, right? But I'll also explain what closing costs are, because some of them really aren't closing costs. We just have no other term for it. To me, in my opinion, paying taxes and collecting for something that you were already going to pay for isn't really a closing cost, because you were going to pay it anyway. We're just using your equity that wasn't earned from income, it was earned from your house appreciating, to cover that cost so that you don't have to pay it out of pocket. Same thing with your homeowner's insurance premium, right? Correct. If they really don't want to collect an escrow and save that couple of thousand, I have had cash out refis and rate in terms not do an escrow, but then they have to understand it's a little bit more risky, and that same rate might cost them a little bit. But they'll still save.
Or, I mean, my feeling is
more cash.
Yeah. I think when we were doing a lot more rate and terms in the market, we were encouraging borrowers to use cash on hand to set up their escrows, knowing that they would be getting a refund of their old escrow account. And, the same truth in lies with a cash out refinance as well. Right. But
there's always be a cost to everything, and my bottom line is you're still getting it. It's an opportunity that, there are most people out there in the world getting $50,000 into their hands is life-changing. Even $20,000 for some people is life-changing, right? So
correct.
Some people
Amen.
do what they got to do to get that money. So if your main conversation is closing cost rate, right, you're doing it wrong. You're doing it wrong. That's not what this opportunity is about. And going back to John's point, it's all about your market. What is the opportunity? Last year, the opportunity was to get the lowest rate of all time and keep your mortgage forever, right? But nobody expected this equity boom. Nobody expected it. Nobody expected the rates to be 2.875. I remember when they dropped to 3.875 and everyone was going, oh my God, we got to lock as many people as we can. Yeah. No one expected a month later, based on the circumstances, whatever, barring all that, for the rates to go to 2.625 4 months later. Yeah. So there are still people that should keep that rate and not take out their money because maybe they don't need it. But for the people that maybe their life would be better because they took out cash, forget what you did last year. We're in a different world. For the people that didn't take advantage of the lower rates, there's still opportunity. And yes, rates will be lower at one point. Everything is cyclical, but we're not talking about that. We're talking about what you can do right now, because the only thing that is guaranteed is the present. And if I can give you money and you can invest it wisely, or do something to your house, or change your life in some bet, or pay off debt, that's a win. And honestly, that's what the cash out refinance is about right now. It is not about rate, and it's not about closing costs. It's about opportunity.
Yeah, it reminds me. I mean, I'm going back a ways, but Greg, you were probably still in middle school when this happened, but back when rates were a little bit higher substantially, I mean, rates were at 10%, 12, 14%, but there were plenty of companies in the late 90s, early 2000s that were doing mailers, and they were doing 125 loans, and those, I mean, that rocked everybody's world. Again, it's not about the rate, but it's about paying off consolidating debt. And we're in a market with high record inflation. We haven't had inflation like this since, it's 40 years, right? So the consumer, the average consumer that has a paycheck, meaning it's an hourly wage and or salary, they get paid every 2 weeks, and they know exactly what's going to come through that bank, right? And those people, because of inflation, we're starting to see Credit card debt,
They're
right,
living on credit
nationwide
cards,
is starting to trickle up a little bit. Their credit is still in good shape in many cases because they're able to make those payments. But more and more, they're going to sleep at night, starting to think, hey, Christmas is over now. This isn't going away. We've got to come up with a plan here to really get back to square one. And like Greg says, a lot of times people might do it again. We encourage people to refinance, pay the debt off, and cut the card. But if it gets them out of a bad, hairy situation today, I mean, you need to reach out to somebody, a local lender. And if you are struggling getting everything paid, maybe it's time to fix that.
Yeah. So I just think, we want to help loan officers out there not have blinders on to what's going on. And by blinders, I mean like the consensus. I mean, consensus is an unfair word, but there's a lot of folks out there who think that with the increase in interest rates that we're having,
it's not a refi.
That it's not a refi market. And,
100%.
And what Greg is showing us is, hey, if you truly are their lender for life, these are the types of conversations that you're having.
Yep.
In helping them do what's best for them and their family. And we're doing people a disservice.
Not asking the question
Not
that Jeff
asking
told
the
us
questions.
about it at Bryan, right?
Yeah.
What else would you do?
Yep.
What else would you do? What else would you do if you paid off this debt? What else? What could you do?
How many people have kids and are thinking about college 5-10 years from now? And, if they had 20 grand in the bank,
529 college prepay, right? For your kids.
Then they don't have to do student loans, which have astronomical, interest rates, and people can't pay them off. I mean, there are so many things that you could do for now and the future with equity that was literally handed to so many people at like a rate that they'll probably never see again. You just have to think differently. You have to think about we got to take mortgage out of it and just see the mortgage as a mechanism to get them their bigger goals. And I think if that paradigm of thinking changes, you could have more refinances this year than you did last year.
Yeah, I mean, you take it like a financial planner advisor.
Yeah.
We've all been there. We all know the conversation, and how many of us follow lead by that? Mm-hmm. How many months of reserves do you need on income? What do they average? Right, minimum of 6. Mm-hmm. They prefer that you have cash on hand 12 months
12
out.
months, yep.
I would bet that less than 5% of homeowners have cash in the bank a year's worth to cover a loss of job, in some sudden instance where you can't work.
Yeah. Yep.
So I mean, the cash out is going to make a family sleep better at night.
And you just never know.
Sorry. That's how you solidify more relationships.
Go ahead, Greg.
Yeah, I'm sorry. That's how you solidify more relationships with financial advisors, because you could say, listen, you just, let's take this money out and go talk to somebody. Maybe you're starting a family. Maybe you have a family. Maybe you lost a job. Who knows? Maybe you had to pay off all this debt and now you don't have money. You didn't know that it was in your house. There are so many people struggling out there right now that have untapped money just sitting there waiting for them.
Yeah.
And I mean, you could go on and on and on. I could do this all day. You could name a topic and I could give you a reason why a cash out.
If you are struggling out there and you are a homeowner, you have opportunity. You need to truly do yourself a favor, a service, and reach out to somebody that can help you, whether it be your financial planner and or mortgage professional, and ask, what could I do?
Planner, talk to a planner, because I don't know what to do with your money. All I know is that there's people out there that can make your life better with that money if you just give it to them. So that's what we do. But you also need to know a little bit. You can't just throw it all out on somebody, right? But, I'm not a tax professional and I'm not a financial advisor, but I do know that assets are king. And if you have assets, you can do more with your life.
Yep.
So.
Cash is king.
If you're a loan officer right now, you're out there doing mortgages, and somebody says, hey, I think I should talk to somebody about refinancing. Don't let it be about rate. Don't let them tell you my rate is 2% and you say, hey, rates are at 4. It's not worth you doing. Ask those questions. Yeah. Probe a little bit, dig in, and really truly find out what their point of pain is, if there is any. If they have no debt and they're at 2, then they stay at 2. That's the advice that you give. But if you dig in and find out, hey, we just maxed out our credit cards, man. During COVID, my wife lost a job. We got behind on some stuff. We're still paying, but we're in some pain right now. We got to get this stuff wiped out. So I'm really dig deeper. It's not about rate.
Yep. Mortgages by Morga. What is there anything else that you want to share with us on this subject?
Hey, you know what I want you to touch on a little bit? If you're out there doing home improvements of any way, shape, form, whether it's windows, doors, solar panels, roofs, right? You talk about home improvements. Many of us have gotten loans, and in a lot of cases, those aren't at very attractive interest rates. And there are programs out there, to help with that financing, and as opposed to having, maybe 15% rates on some of that debt. Greg, you want to talk about that a little bit?
I'll end with this actually. If there was one piece of advice I could give out there to loan officers, whether they're new or whether they've been around and they're worrying about, a Rolodex and everything right now, I think a really, really strong Rolodex to build right now is contractors of all sorts, a glass guy, a roofing person, a solar consultant, a general contractor, anything that has to do with renovation right now. I think it probably would be in your best interest, a financial advisor, to get that kind of Rolodex right now, so that when you do mention these things like I talk about, I also have people that I can refer them to that can further solidify what they're doing with their cash out refinance. And that takes it away from you being a product and turns you into a mechanism to get what they're getting done. So I have solar consultants, right? I have contractors that are in my area. I have a glazier, my dad, but I do have one. He does bathrooms, he does shower doors. I have an electrician I could call. I have a plumber, right? I don't use them all every day, but if there's somebody out there with any kind of thing that they need to get done with their house or improve it, I have somebody that I can give them that can solidify what I'm talking about, whether it's price them out, estimate them. And now it's not just a thought in their head, it's an actual thing that's moving forward. And I think that would be a huge Rolodex to work on right now, because now they're also going to give you business, because what do they do every day? They give estimates. And what's the easiest way?
I want a kitchen done, and it's $50,000. Now, next step, how am I going to pay for it?
Yeah, how am I going to pay for it? Well, why don't you not touch any money in your bank and use your house? And I have a guy. Like, these are the relationships you need to work on right now. Because the equity's there and it's just sitting there for people. They don't know about it, right? And your Rolodex, those people that you reach out to, those contractors don't know about this opportunity either. I guarantee it. And you could be their guy. And that could be the difference of you getting 2 or 3 or 4 loans more, and not rely.
And that could be the difference between
them getting 2 or 3 more jobs.
Getting a couple more jobs. You're making sure they get a couple more jobs.
Yeah.
And then you're not relying on this purchase market with low inventory and rising home prices and 50 deals going out and only one getting accepted. Now you have a different way that you can shift and hedge and still get business.
Yep. Dude, nice job, Greg. Listen, first of all, man, I appreciate you stopping everything that you're doing. You've had an incredibly busy week to jump on here and break off some knowledge for our listeners, man. You killed it again. And I'm sure a bunch of people, if you're watching, man, I hope you were writing down as fast as Greg was talking, because he just gave you a couple of ways to help you make 22 your best year ever. Yep. Dude, we appreciate you being collaborative and sharing with everybody. Listen, iron sharpens iron. I say that all the time. So thanks for helping us sharpen ours. So,
amen.
On behalf of Greg and John, thanks for tuning in to another episode of the Context to Contracts podcast. If there's anything that you need, please know we're always here to serve.